Thank you, Siddharth. And I think everyone who comes on stage appreciates the energy that Siddharth brings, and everyone kinds of thinks that we should have the similar energy that Siddharth brings. Well, thanks for this, and glad to have all of you here. And as we have been discussing thriving in the world of digital since yesterday, we had RBIH CEO yesterday talking about how the BFSI companies should simplify the complex products, and that's a need. Not just we should focus on UI and UX. And then most of the top bankers also followed the same link, but the focus is absolutely on how to sustain in the digital world. So again, the idea behind having this topic thriving in the world of digital, and specifically this topic discussing with the CEOs, whether it's insurance, fintechs, and the bank CEOs, is to understand where is the evolution of digital heading and what kind of strategy the CEOs or specifically leaders are adopting to take digital to the next level and also make their companies very sustainable. So considering a lot of changes and challenges we saw in the NBFC space in the last 2 to 3 years, I think now no more is calling NBFCs a shadow banks. I think they have kind of proven themselves, and the kinds of partnerships which the NBFCs are having with the banks and the fintechs, whether it's co-lending model or maybe a quick disbursal of loans or the retail growth, I think it's quite interesting. So considering today's situation where the credit growth is kind of remarkable and everyone is rejoicing it, I think I will start the first question on this fundamental note of credit growth to each and every one here. And Mr. Jain, I will start with you first and try to learn from you in terms of what is the current situation of NBFCs in terms of credit growth, in terms of the market demand?
Thank you. So I think the NBFC has come out of crisis, or maybe a trial by fire, since IIFL crisis, when liquidity had almost disappeared for most of the NBFCs, other than maybe the ones backed by industrial houses. But all NBFCs faced difficulty, and then after that crisis, in fact, we had many more crises, including DHFL, and then we have COVID, which again suddenly hit even before the NBFCs could come out of the liquidity crisis. There was asset quality challenge from COVID. So I think, and now there's a war which has its own dynamics of the geopolitical, but I think they all have been taken in stride. So most of the NBFCs, or the NBFCs that have survived, or the NBFCs that pivoted their business model to the new reality and the new environment, now they seem to be far better placed. So in a cyclical, if we say that the businesses or the sectors or NBFCs pass through cycles, then I think we have seen the trough and the things are moving up and they're looking better and looking more promising.
Sure.
In terms of credit demand also, it's linked to the economy. As the economy is doing well, credit demand is good. What we are seeing is that, maybe look at public sector banks. They have their deposit franchise is intact. Their CASA deposit, what they're able to garner is as strong as ever. But on the lending side, they haven't really added manpower or the capability, and that is where they are looking at NBFCs to partner. So I think going forward, this is a business model which is emerging out of the crisis, but probably can be win-win for long term.
Sure. Mr. Singh, Mr. Jain spoke about how the promising sector looks like. What is your view? How do you see the NBFCs currently?
So as Mr. Jain said, if you look at, I think the demand is quite strong, and COVID was there, and maybe there was a suppression of demand over the 2 years, and it's coming out. Also, economy is doing very well. If Indian economy is growing at 7%, and if you look at and compare it with a global scenario, I think Indian economy is doing much, much better. With that as a background, if you look at the GST collection is almost 1.4 lakh crore every month over the last 6-7 months. So clearly all the building blocks of the economy are really doing well. And that clearly gives an opportunity for lenders to really, and that's clearly evident in terms of the credit growth, which you see 16-17% is the kind of credit growth we had not seen over the last 10-12 years. So clearly big opportunity, and also India is a very large and diverse country. And if we have to reach out, the credit penetration is still very low across the segments, especially the MSME and the lower end. The credit penetration is very low. We need to do a much more, I think, in terms of the credit growth has to continue this way to really get to a penetration. Also with the formalization of economy, which has been happening over the last 5-6 years, if you see, I think that also is helping the credit growth because there are more and more MSMEs and more individuals who are coming into the ambit, or as we call it, new to credit, into the overall credit fold. So we see a very strong momentum at this point in time. We wish that this continues and the economy sustains. And we are quite geared up as from a funding point of view, from the credit quality. And if you look at from that point of view, we are in a good position to take advantage of this situation.
Sure, quite meaningful, Mr. Singh. Mr. Sridharan, how do you view the current state of NBFCs?
See, if you look at the numbers overall, it's very straightforward and quite clear. Amongst all the economies in the world, India is the only economy that can make the statement that credit growth right now is at a 10-year high. No other country can say that. We can say that. If you look at the composition of that credit growth, it was entirely in one segment, which was the retail or the consumer segment. And what you're seeing increasingly is that it is spreading over. Obviously, small businesses are doing really well right now from a credit growth perspective. And a little bit of corporate side growth has also started coming. So it has become a little bit more broad and broad-based than it was a year ago. If you look at the NBFC side, and you look at the various parts of NBFC, Umesh sir is here. I'm sure he will tell us a little bit about what's going on in commercial vehicles, all-time high growth going on there. You're seeing what's happening in affordable housing. Again, incredible amount of growth reported by every entity in that segment. Small businesses, we saw 5 stars, process that just happened, and we all saw the numbers and the performance there. It is segment after segment. You can see that growth right now is remarkably strong. If anything, it should give us a little bit of pause, and we have to think about the contra here a little bit. An environment in which credit growth is so strong, but deposit growth is actually not very strong at all. It's not sustainable for the financial sector as a whole for the long term. So that's the area that we should, right now is not the time to worry about, is there enough growth? There's more than enough growth. The question is there too much growth compared to the kind of deposit growth we have right now?
Sure. Mr. Revankar, your remarks also.
I think other panelists have already expressed their view on the growth. In fact, there has been talk about K-shaped recovery, where every segment growing at a different speed. But when I look at the ground reality, I feel every segment is growing. Maybe there were some lagging, but they have recovered now fully. Most of the manufacturing, the installed capacity they are reaching, new capex being announced, at least I keep hearing. Infrastructure is doing all-time high, government spend is all-time high, real estate is doing very well. Most of the cities, they're reporting all-time high tax collection or stamp duty collection. Then agri, there was one view that agri or rural area is not really consuming enough. They're growing slow. But what I observe is the rural had an impact last year during the COVID wave 2, because it hit the rural hinterland of the country. That is, the Hindi belt was hit badly, and they recovered little late. And this year again, there were delay in rains. Normally rains come in July, but it started coming from September. So there was little delay in recovery, But I think now the demand is back. The two-wheeler sales, if it is one of the indication in the rural area, semi-urban areas, it is all-time high in October and November. That month on month it is progressing. That means the demand is back in the rural area. But one thing we have to understand that Indians, the way they consume, moment they see inflation, they curtail the consumption so that they don't borrow and, of course, maybe the instrument like BNPL, credit card, not available in the rural area. So they have to consume a little less. That doesn't mean that there is a weakness in the rural. So I feel the growth across, the demand is coming from all sector. I see demand coming from the heavy vehicle, small commercial vehicle, passenger vehicle also is now bouncing back because passenger vehicle did not have any addition. If you look at most of the Ola and Uber now in the city, all are 5-6 years old. You don't see any new addition, but it will come now. That will come. So I feel the demand will come in every segment, depending upon the requirement and the kind of growth they have witnessed in the last 1 year. And the commercial vehicle sales also is still not reached the previous peak. Previous peak was in 1819 with 1 million units. Now it has reached around 800. This year, it may end up with 850,000 units. Still time to go. So normally, within 3 years, we reach the peak, or 3 to 4 years. This time, it is taking longer time. One of the reasons is the cost of the vehicles have gone up. The inflation also makes people to postpone their buy. And that's good. If there is a long rally, it helps everyone rather than a quick rally and going down. So I think India's growth story would continue to remain very strong for a couple of years is what it looks like.
Sure. I think the one common factor or one common layer which the CEOs of large NBFCs addressing here is there is a strong growth, strong credit growth, and also the economy is also shaping up. I think that's really an important point, and thanks for reiterating that, because sometimes we look at the market data and then we create our own views. But now let me get into the digital very specifically, which is also one of the important theme of our discussion. And Mr. Jain, I will come to you. Not a single NBFC has avoided digital. Everybody has aggressively using digital adoption, and I say that now it's not about adoption but evolution, how you go ahead with the digital evolution. So I would like to learn from you in terms of at India Infoline, what kind of benefit digital has given to you, what kind of business value digital has added to you.
Thank you. I think the entire business has got transformed, although it's been incrementally, so we don't realize, but if you look back, say 5 years ago or 10 years ago, the way we are doing business and the way the business is being done now is very different. So India is first of all uniquely placed because thanks to the government and the effort, the digital infrastructure that we have is not there in any other country. So what is called India's tech, which starts at the bottom with identity layer, and then there is the authentication. So identity is Aadhaar, then there's the e-sign. But we have gone much ahead with the data through account aggregator. Now we just started moving in, coming in from where you can get all the data digitally, whether it's the bank data, GST data, income tax, and everything can be analyzed in a fraction of a second, and the credit can be accepted or rejected. But besides what we have done right from the beginning, our focus has been on not only digitizing the processes, digitizing the underwriting, fraud detection, and all those activities are at one hand. But what we have done, we also done some joint ventures. There are many FinTechs, they are very creative and they specialize in a particular field. So one joint venture that we have is with the neobank. The neobank basically allows the small SMEs to open current account very quickly, and they offer other services including accounting, GST, payroll, and obviously all the data is available. With the consent of the prospective borrower, you can get access in a digital format. And similarly, we are tied up with a number of other digital players that provide very specific services from the in-person verification to bank account statement scrapping to the fraud detection and many other algorithms that work. So on one hand, we have a large team, more than 300 people internally, who work on technology as well as data analytics. And at the same time, we would have partnered with dozens of FinTechs. The partnership can be a simple business alliance to a joint venture. But the way digital ecosystem is developing and evolving is there are a lot of innovation, a lot of creative things are happening, and it can't happen with one entity or one organization. So it's more about collaboration and partnership.
Right, quite meaningful one, and I think that's kind of a theme where collaboration and partnerships is shaping up. So, Mr. Singh, I will tweak the same question that I asked to Mr. Jain. So, how has not just digital benefited you, but in terms of revenue, in terms of disbursing more loans, and in terms of reducing the cost of operations, how did digital help you on these three parameters?
So clearly, if you look at what do we look at when we give a loan to a customer, we look at his identification, we look at his income details, and we build a scorecard in terms of giving a loan, in terms of the eligibility criteria which we put it to give the loan. And that's what digital has helped, as Nirmal mentioned, that in terms of the tech stack which was available. So what we have done is we have leveraged that in terms of so not compromising on anything. We are using that tech stack to create identification of the customer, to assess the income, and really create journeys which are very simple and seamless. It's frictionless journeys which has been built over a period of time to provide the convenience to the customer. So now the size and scale of the business is really gone up multiple times. We acquire more than 1.2 million customers in a quarter. Earlier, we could have never thought. And now also what we have done is we have built capabilities in different segments, which are more specialized. So giving a healthcare financing, trying to create and trying and understand that ecosystem, leverage the ecosystem and provide that healthcare financing, education. Similarly, B2C, if you look at the e-commerce today industry, consumer behavior, I think is such that they are buying online. That is e-commerce in terms of 4 lakh crores. How much can we really, and that is all is the spend trends which are getting built up. How do we use analytics to build scorecards and all? So if you look at, we have leveraged that, and as was mentioned earlier also, we have partnered. So you can't create everything yourself. The verification. Earlier also we used to depend on verification with an outside agency. Now everything is built online. And that's what really helps us in terms of doing it immediately online and really assess the customer. So making the journeys very simple, convenient to the customer. And that's also you're seeing in this space. The product like BNPL and small ticket loans. And you do a parallel with the FMCG product. In the FMCG also in India, because it's an emerging economy, you have small sachet products. That we could build it in financial services only because of the use of technology, because otherwise the cost of delivery was so high. So that's what we have leveraged, created capabilities across. On the consumer side, we are building for our MSME customers. So we are creating a platform for MSME ecosystem as well, so that we can really reach out to the smaller businesses as well.
Okay. Major highlights, I think, very important highlights, Rakeshji. But since you mentioned about BNPL and digital lending and sachet products, I am really excited to ask you this question, which I asked another banker also yesterday. We have seen a great demand in the sachet of the products, and I'm really surprised to see most of the Gen Z or the millennials are borrowing for, a very unusual reason. Young people are actually borrowing for going on a date. They are also borrowing for going for a wedding, attending a wedding, and a lot of FinTechs tells me. So my question is, how do you actually underwrite? Because my worry is, उसने डेट पे जाने के लिए पैसे तो लिए हैं, ब्रेकअप होने के बाद पे कौन करेगा?
So I don't know, these are quite outlier in terms of, but if you look at what people are buying or taking loan is for most of them at the moment of truth. In terms of checkout financing, if someone is buying a handset, someone is buying and it becomes quite convenient for the person to really get that converted into an EMI. I think a lot of that, So these examples might be and is different, but from a consumption point of view, I think you will see consumer behavior is changing, and that's where they are looking at a ease from a affordability point of view.
Sure. So, Mr. Sridharan, I would like to also, ask you the similar question in terms of whether the business model has really improved by adopting digital, whether it has really helped you to reach out to large number of customers, unusual customers, perhaps you could not have reached otherwise, and it's also creating a profitable business model for you.
See, one way to kind of think about this conversation is to ask yourself the question, digital for the sake of what? Right? We shouldn't get carried away with saying we should do digital because everybody is talking about it. That's not a sound reason to do anything. But if you look at, imagine a sort of a 3x3 grid. What digital can do is it can increase revenues, it can help you reduce cost, it can improve customer experience. Those are three things it can do. And it can do it at 3 stages. It could do it at the customer acquisition stage, it could do it at the account management or lifecycle management stage, or it could help you in collections. Those 3 stages of an account's life and 3 things that a digital can do. Each organization needs to look at their own context and figure out which of these boxes is most important to me. From a FinTechs perspective, maybe the only box that's really important to them is customer acquisition stage, revenue improvement. That one box out of 9 might be most important to them. So they might put all their eggs in that basket, and everybody is talking about how so many new customers are getting acquired and new businesses are coming up, new product types are coming up because digital exists. That's great if that's the thing that creates value for you. For a different firm, value might exist in improving customer experience. For a different firm, it might most of the value might come in collections, right? You have to pick the right box. Aligning the tool with your strategic imperatives is what's going to drive success in the long run, right? Digital is not an end in itself. It's a very powerful tool that can help you achieve your goals, and help you move very, very fast. But if you don't know where you're going, you will reach nowhere very fast.
Okay, quite meaningful. So my next question is to you, Mr. Revankar. But before that, the small announcement. I have lots of questions, but I would like you also to be part of the conversation. So if you have any specific questions, be ready with it. I will come to you after asking a question to Revankar, Mr. Revankar. So, sir, we spoke a lot about the digital has created a consumer evolution, or how NBFCs are catering to specifically consumer segment. What difference it has made in specifically the commercial segment where the demand is also skyrocketing? And why I'm asking you this is because I'm sure you must be dealing with a lot of traditional or people who are very conservative and perhaps not a very digital savvy. So how has it helping you there, and how are you using digital there?
Yeah, see, our business model is financing business. Whether it is acquiring an asset or running a business, or maybe for working capital. Ultimately, the funding has to go to a purpose of business improvement and building efficiency. Now, as far as digital is concerned, the moment customer has a smartphone, we are digitally connected. Everything can be done digitally between two of us. As a finance partner and as a business partner, we are connected. Now, whether it is a auto rickshaw, 3-wheeler, or it can be a heavy vehicle, or it can be SME business, or it can be even a shop. So everywhere. So what is important is which medium you connect and how you transact. So the transaction has been happening over so many years between us and the customers, and the partnership is already built. So ultimately, both of us are looking for building efficiency. So the customer also wants efficiency, we also want efficiency. So it's a mutual understanding and partnership that helps to build a digital model. Now, if you look at the way bank have evolved, 30 years back, I would take a token and wait for the token number to be called to take my cash 30 years back. Now, even just 3 years back to transfer money, RTGS, it will take 3 days. Today it is instant. So the way banks have evolved, how the digital has helped them, the way it is helping NBFC also. Every NBFC which has a reasonable size, they have moved into a digital transaction with the customer, whether it is a payment, whether it is new services, whether it's the top-up offers or whatever it is. Right. So I think the journey has been quite strong with our customers, and we would like to improve it as and when our customer is ready. So ultimately, the partnership will continue the way the readiness with the customer is. Right. And we will be always one step ahead and be ready so that customer is convenient.
Right. Sure. So quite meaningful, I think, and the fundamental, I think, remains the same when you say, you're in the business of financing. Meaningful thoughts. Yes, let me come to you. If anybody has any quick question, then can we have a mic there on the first row? The gentleman in blue jacket. Just quick thing, just because Mr. Jain, who is also market veteran here, don't ask anything about which stocks to buy.
Wonderful.
And second, don't ask for a discounts if you are a borrower here.
Thank you, Amol, for taking my suggestion and implementing it immediately. So my question to you is this. Everybody is now, waiting to give you money, sending a loan. Every day you get 5 SMSs from different NBFCs and banks asking you to please take a loan. What is the data you are gathering from people, especially where NPA is concerned? Is there a specific region, area, occupation, demographic where you find that NPAs are more? If you could clarify that. And since everybody's talking about digital, I think that could be, got at a press of a button.
Sure. Thank you. Mr. Jain, you want to reply?
So this is very interesting that people in this room will be approached by 100 people that take our loan. But if you go to villages or tier 5, still nobody knows where to get loan from. So they'll be knocking doors of banks. So just to give you data that, there are about 75 million MSME enterprises in India, out of which 70 million actually need a loan of less than 50,000 rupees. No mom and pop shops or whatever. Nobody actually looks at them. So I think there's still a digital divide. And people who are living in large cities like us, it's very difficult for us to visualize what financial inclusion is or what is it supposed to do. So that is the first part of your question. Secondly, NPA, obviously every NBFC, every lending institution has to continuously be vigilant about it. And what you're saying is right, that there are certain segments which are getting over-serviced or over-accessed by the lenders because of their bureau score or because of their credit history. That's where a risk, because even if somebody is good, 10 people say, le lo, paisa, le lo, then he takes it, kind of a thing. Like, in the Marwadi wedding you go, you end up eating a lot more because there's so much a different type of food. And obviously you'll have a problem in terms of acidity and indigestion. So those kind of issues are there, but, that's part of the business.
Okay. Thank you. Thank you for that answer. Any one question? Yeah.
Yeah. Hi, I'm PKD Prashant Kumar. I'm from basically a digital transformation company. I have worked for IBMs of the world earlier. This is not really into the digital space, but then, from the general observation is that while digital has kind of swept in all the confines of the NBFCs, today, but then the major problems that NBFCs had faced, the recent ones as well, it was more of their exposure to the capital, huge capital exposure industry, right? Those were the big, borrowers who were not paying back. Retail, I do not really think was such a big problem. I mean, you can correct me because I don't have such a detailed, deep understanding of the market. I want to understand is that how digital has helped you to kind of address those NPA issues at the current juncture, and what do you feel about is that, and what is the kind of your thoughts that, in terms of the retail, your delinquency rate is more, or in terms of the, more into the capital, the delinquency rate is more, where your exposure also will be definitely very high.
Okay. Maybe you could have simply asked that, what made Vijay Mallya run away, right? Okay. Mr. Singh, do you want to quickly take that question?
So, see, we look at every segment very differently, and we just track and monitor the performance of that segment. And the earlier question, which was there, how do we look at the performance of each segment? Now, the credit bureau is quite rich. It gives you segment wise, it gives you PIN code wise in terms of the performance of the different portfolios and different customer cohorts. And on the top of that, we have built our own, and each institution would have built their own analytics or the data driven in terms of learnings, which segment, which city, which is doing well, which is not doing well. So what you do is you tweak certain cohorts, the ones which are doing well, you relax and you try and see that you can acquire many more customers from that. So a lot of work is happening on that. And the good news is that we have enough and a lot of data which we can really leverage on. But in terms of whether retail or capital, whatever on the wholesale side, in terms of, clearly, I think these are small ticket loans. And here the credit cost is also priced in. So you look at a risk adjusted return for the segment, for the product. And that's how we really look at. Most of the NBFCs are focused primarily on the retail, MSME segment and all, and some bit of, even if we do a very small bit of, which is on the wholesale. That segment is being served primarily with the large institutions and all. So a well-developed, and over the last, at least post-COVID and all, the way that, because we couldn't even go during lockdown, we couldn't even go and collect the money. So all the analytics we used to collect money, sitting, working from home and all. And a lot of work has happened in the last 3-4 years, I would say.
Oh, quite meaningful thought there. Any one question? Any one question? Okay, sure. So let me come back to you, Mr. Sridharan, and from where Mr. Singh left, I will start from that only. So whenever I speak to NBFCs, I think during the pandemic, everyone said one similar line, and that is, it's not about lending, but it's about recollection, or it's about just collection, and that's the biggest thing, Mr. Singh also mentioned that most of the NBFCs started working on during pandemic. So disbursal is obviously quick, seamless, and quite feasible with digital. How feasible the recollection or the specifically collection procedure is also under the digital, and how is it actually helping NBFCs, maybe to, counter the NPAs or maybe stop people like Vijay Mallya from running away?
See, there are some things digital can do really well. For example, with the latest data and analytics and AI technology, you can predict default at the point of acquisition better than you ever could. So large databases are possible, very sophisticated analytic methodologies are possible. Cloud-based computing allows you to use really complex decision making algorithms through which you can underwrite well. So the underwriting process and prediction of probability of default, today's digital technologies are extremely good at doing. So that's step one of risk management. And there, I think digital is infinitely superior right now to human judgment, right? It's just gone to a different level. It's like a human trying to play against the chess machines. You cannot win, right? The machines are just far superior. So in this core underwriting bit for small ticket, large number transactions, machines are won. The second part is what you spoke about as early stage collections. I'll split that into a couple of parts. Early stage collections, where you're trying to figure out who will repay on time, who needs a reminder right before the due date, or if somebody has gone past due date, who should be given a gentle nudge through an SMS, who should be sent a reminder on WhatsApp, who should be just left alone, and who's giving us a serious signal and we got to go knock their doors, right? Identifying that, again, digital is super good at. And for 80% of the population, you can actually just collect digitally by just sending them a reminder, doing some automated IVRs, a bunch of things, very simple technology, sending them a link and say, if it looks like you forgot to pay, please pay here. People just pay. Lot of that early stage collections, digital is very good at. Mid and late stage collections, pretty much digital is no good. It does not work. I'm making a slightly strong statement, but by and large, it does not work. And it was proven quite decisively during COVID that early stage curing stuff worked nicely. But when the customers migrated, went to their hometowns, etc., and you did not have physical presence on the ground, essentially credit losses of everybody who didn't have physical presence just skyrocketed. So late stage collections, if you have to recover a vehicle that you have lent against, or you go to do surfacing on a house or whatever it is, digital is no use. You have to have physical capability. So end of the day, to succeed in lending in our country, you have to use common sense. Like, use digital where it is most powerful. Be ready to go physical where it is most powerful.
Okay. So, Mr. Revankar, I will also take your views on the collection and the defaults and how robust the whole underwriting process that you have developed digitally, while disbursing the loans. Important point Mr. Sridharan mentioned is about SARFAESI Act and maybe, taking the property into the possession, right? Once, if by any chance there are defaults, which is quite possible specifically for the consumer finance companies because it's either a vehicle or a house, right? Maybe a car I'm talking about, but for you it's commercial vehicle. So one, how robust is your underwriting process? Whether do you foresee the defaults? And second, agar default ho jata hai, तो you don't have also an option of possessing something, because अगर वो ट्रक लेके भाग गया तो क्या करोगे फिर?
You're asking the master of the game how to do something. Mr. Revankar has done this all his life. He can do this with his eyes closed.
I'm sure he must be chasing those truck drivers and he knows where they are going, but we'll be happy to know all this.
Yeah, I'll tell you my experience. Now, digital versus the common sense. Okay. Now, 30 years back, when we were lending vehicles, we did not have even telephone. Customer did not even have telephone. Even I did not have telephone at home. So how to identify the customer movement, how to get the intelligence, how to get the information. What we used to do is understand where the trip has gone and try to figure out from other customers where the opposite side, which vehicles are coming back, and then ask them, this vehicle number, where did you see last? By tracking that, we will identify where exactly he has moved, which location, and we'll finally catch him. Now, that is okay, repossession or collection of money. If you are using the intelligence in a very simple way, there are a lot of method for interacting with the customer and collecting money. Now, digital is not going to give any solution for that. It can give you information. It doesn't give you solution. In fact, yesterday I was in London. One of the fund manager was telling me they have found a new way of finding out the early stage default. He said if somebody is buying butter of 5 pounds and next month he buys it 3 pounds butter, that means something is wrong. That's how they are trying to identify likelihood of early default. I told him, see, I shift from 5 pound to 3 pound because I get wrapped from my wife. Because she will say, you male people, your male ego, you want to buy the costliest one and impress me, don't do that. I said, it's not that simple. There could be many reasons for changing the habits. So that doesn't give you indication. So oversimplification and thinking that I have found a solution is not a solution. You need to work with customers. You need to understand the customer. You need to understand the business. See, we get lured with oversimplified solution and feel that we have done best work. Nothing can go wrong and go to sleep. That's where you make a mistake. You can't never be sleeping. When you lend the money, you can't sleep. Forget. Otherwise, don't be lending business. So that's where I feel a common sense, keep alert and keep watching your industry and people and customer and keep it in a dialogue with them all the time. That's very important. even though all the inputs what you get from various sources, you keep collecting it.
Very interesting thoughts. So please remember when you're going to buy a butter next time, you have to ensure. I hope all of you buy Amol butter only.
Keep it at the same level.
Not because of it's just my name. No, sure. So I think I got a good headline. Oversimplification is not a solution. And, don't rely on artificial intelligence so much. Use your own. So that's quite interesting, Mr. Revankar. I have two important questions and to all of you. And I will start with you, Mr. Jain. So we spoke about the partnerships and the collaboration model, which has been benefiting both banks, financial institutions, NBFCs, and also the FinTechs. But what I would like to learn is, given FinTechs are born digital, their thinking is absolutely digital. And with the rise of digital-only models, what kinds of changes will happen in the NBFCs model? Because currently, you are at a dominating position. I mean, you as in the whole large NBFCs will tell FinTechs maybe to do this way and that way. But tomorrow, the kind of evolution which is happening with the tech companies and the FinTech companies, they will also sit with you next to the table and say, let's do this. Maybe the next time the FinTech companies will also come and sit with you and say, okay, let's do this way. So how the whole collaboration model will shape up? Because it's absolutely based on digital. And what I see is they may have an upper hand in terms of technology.
So I think jury is out on who will have the upper hand, but fact of the matter is that most of the NBFCs can learn, can adopt, and can embrace fintech and technology, and can be fintech in many ways. But for at the other end, fintechs to become NBFC, they will need regulatory approval. And RBI, basically maybe rightly crack down, because many of them probably can be a systemic risk because they don't really understand credit, and many a times the models which are developed in lab are really, and I resonate with what Umesh was saying. In artificial intelligence, we should not forget our natural intelligence. In fact, Tim Cook also said very aptly, that he is not worried about machine thinking like man, but is worried about man thinking like machines. So what is happening is that there's a fintech, there's a lot of noise. And of course, some of them will emerge stronger and some of them may become NBFCs. But the challenge for them, as it is with the largest payment wallet company today, is that if they try to become NBFC, they get valued like that. So some of their challenges are not that the technology and the innovation that they can do, but because the kind of valuation that they got and the kind of expectations that investors have, which won't allow them to take a natural path of growth and learning. And that is where probably the threat may be much lesser than what people feel. Right. And secondly, the market is like an ocean in terms of the Indian market is growing very well. It has room for everybody. It has room for a number of fintechs and also NBFCs. And also see, the lending market is one which is not that winner takes it all. So I don't think somebody has to worry about threat that they will have an upper end and you'll have a lower everybody has opportunity. And all the finance companies will basically learn, evolve, develop technology. And the technology, new fintechs also will probably do lending in an innovative way. But there's room for everybody.
Okay, sure. Mr. Singh.
No, I agree. I think there is a room for everyone. And also just adding on the previous question, digital is an end of all solutions. It can only serve certain segments, certain ticket sizes. Beyond that, you will have to have phygital, then you will have to have physical in the corporate lending. So I think it has to be a combination of all. And you have to use or leverage the capabilities which has been built for certain segments and also. But here, see, everyone brings some value to the table. Banks, clearly liquidity, they bring liquidity to the table. And they provide that liquidity to the entire system. NBFCs has the capability, the balance sheet strength, the large ones, their understanding of the business, understanding of the segments. Fintechs, they also bring a lot of innovation and understanding of certain ecosystems quite well. And I think we have to see how do we leverage all of that. So it's a combination of all, and it's not that we have to thrive and we have to work together. Someone brings some value to the table, and you take all the innovation which has happened through the fintech or the startup world. You can take that, leverage it, and then reach out to the customer to provide a simple and seamless journeys to the customer. So I think at the end of the day, it's a combination, and we all have to work towards meeting the consumer and customers' needs.
Okay, sure. So taking inputs from both of you, now I will slightly tweak the questions to the rest of the speakers. So the combination will work, and there is a room for everyone is the learning that I have with the collaboration model. So Mr. Revankar, how do you think this whole collaboration model will shape up between the NBFCs and FinTechs going ahead? And I will, ask Mr. Sridharan also to answer the question, the same question later.
No, I strongly believe that FinTech has played a very important or credible role at building the intelligence into the way business has been done. And instead of NBFC themselves trying to work out a solution, the FinTech platforms have focused on few of the problem areas, and they have developed their ideas. And that's where the collaboration works for both of us. And I think where you have a specialization, where you have a focus, where you have understood the problem area, and understanding this problem area and reducing the cost of running the operation because you are addressing the problem. See, these are all the areas where I think the collaboration has been working well. But in some cases, what I've seen is some of these fintech companies, moment their cash balance is big, they don't have enough ideas to spend, they want to lend money. That's where I feel that goes wrong, or that rather goes in a direction where they feel they can address the issue of lending and collection, which I feel have gone not correctly or not gone properly, is my view. I may be wrong. I'm not preventing the fintech company from becoming NBFC, but that is where I feel over eagerness to do something, sometimes you can get wrong. Otherwise, we have worked with many the fintech companies in identifying and getting solutions, and it has worked very well for us, and we continue to do it. At any point of time, we should be working with at least 40, 50 different tech companies for various solutions.
I'm sure. Mr. Sridhar.
See, my feeling, given the way regulatory landscape is going, Umeshji's point that when somebody is flush with cash, they take sometimes slightly unreasonable chances with their balance sheet, and that results in poor outcomes. And the regulator clearly is not happy about that. And so all the new regulatory guidelines are pushing for a certain kind of organization structure for tech companies. Given that push, and given what we are seeing right now in terms of the funding winter, we saw a big news announcement today morning, or a breaking news announcement that you guys broke. You look at some of the developments, and it feels to me like 5 years from now, it's more likely that FinTechs will look like NBFCs rather than that NBFCs will look like FinTechs. That seems like a more likely outcome right now. Now, if you look at the value chain, right, and where FinTechs have added value, on the distribution side, FinTechs have added tremendous amount of value. On product innovation, FinTechs have knocked the ball out of the park. They have really done extremely well and added a ton of value. But in underwriting, it's been middling. Maybe some would even argue that they've made underwriting standards worse, not better, for the industry as a whole. And collections, there has been no contribution on from the fintech side. So there are a couple of areas in which they've added a tremendous amount of value, and there are a couple of areas where their impact is negligible to none. Right now, this is not to kind of praise them or bury them. Like, this is just a statement of the facts about how the world has evolved. So we've got to learn from the pieces where the fintechs have proven to be really, really good, and particularly product innovation, and a little bit on digital distribution. And hopefully, we'll be able to teach them a thing or two on areas where institutions that have survived multiple decades have shown their strength, particularly in terms of underwriting and balance sheet management.
Okay, again, interesting highlights here. So my next is, I won't say it's a direct question, maybe a observation or thoughts, and I would like all of you to share your perspective. So two examples I have. One is, and Mr. Jain, you spoke about it, the global economy in the first part. In fact, Taimur Beg, the chief economist of DBS, used this term called polycrisis. He said we are living in a polycrisis where the unprecedented events are happening, back to back. So one, we are living in this situation, and second, there is a huge pickup everywhere, like credit growth, or people are buying vehicles. So what I really want to learn, and maybe I do not have the sufficient data points here, is it a real credit growth or is it a FOMO movement where people are just buying because they don't want to left out? And if it is a FOMO movement, are NBFCs and banks ready to cater to the losses which may occur, considering the economic slowdown is happening in each and every country? Obviously, we all believe in the India story. So if I put it in the question, then maybe, is it a FOMO movement by any chance you think, and are you prepared for it going ahead, considering the global slowdown is also happening simultaneously? I will start with you, Mr. Jain.
I don't think that the credit growth is something which is like a FOMO at this point in time. In fact, maybe this buy now, pay later also is a very small segment out of the overall credit growth. It's relatively insignificant at this point in time. That's where probably you can ascribe it to that people are trying to buy in with a vengeance or in a hurry. But at least in Indian context, what we are seeing, credit growth is more or less real, driven by the economy doing very well, one. Two, the new millennial, their habits are different. They can consume more, they can borrow to consume, which was not our generation would do. But that is what Western world has been doing for decades now. I don't think, there can be pros and cons of this, but there's nothing to be unduly perturbed about it. They want to borrow earlier and live their lives, from a early age rather than, delay everything for a later age. So what we are seeing, there's a vibrancy in the economy. Of course, there can be certain other factors which are, in terms of the marketing or digital, but I think their impact is much lesser on the overall credit demand. Predominantly is driven by the rebound in the economy. There could have been some pent-up demand where people might have delayed their decisions during the pandemic. But I think India's growth story is real.
Sure, noted your points. Mr. Singh?
No, I agree. I think this is for real. If you look at and I mentioned it earlier, the GST collection, which is happening month on month, and that clearly is an indicator of the economic activity which is happening in the economy. Economy has been growing even at 7%. That's quite a strong at our size of the economy. So clearly, it's not a FOMO moment or something that people are going and buying. Yes, consumer behaviors are changing, and consumer behaviors will change as we see. If you look at the OTT platforms and everything else, so we are exposed to everything which is happening across the world. And the consumer behavior, Gen Z, millennials, all of that, the behavior will change in terms of consumerism. And that should drive some bit of credit growth. But overall economy, if it grows at 7% or 6.5%, I think you need a credit growth of 15-16% to really. So it's for real. The way we see it at this point in time, until unless there is something externally which happens at a macro level. But at this point in time, it looks for real. And yes, there are challenges on the export side because the global economy has not been doing that well. So on the export side, there are risks. Yeah, but the domestic demand is for real. And I think that really puts us in a good place that the economy, at least for the next 3 to 5 years, will continue to grow on similar trajectory.
Sure. Sridharan?
See, I agree with much of what has been said. Let's keep this whole sort of pure digital lending thing in perspective. Today, what we see in the form of pure digital lending is small ticket unsecured lending to individuals. That's pretty much the only thing that is fully digital. Everything else is happening in much more traditional ways. The total lending outstanding in India is, give or take, about 150 lakh crores, of which individual lending is only about 70 lakh crores, of which unsecured lending is only about 6.5 lakh crores, of which pure digital lending is about maybe 20% of it. So essentially, of 150 lakh crore outstanding in the country, about 1.25 lakh crores is probably fintech influenced. So it's less than 1%. So it's too small. It's too small in the larger scheme of things. Now, this is not to disparage the contributions of the sector. It's fantastic, and it has all come up in no time at all. So it's worth appreciating. But it's also important to keep it in perspective that a lot of what's going on in credit, if India's credit is growing at 16%, it's not because fintechs are lending a lot. They cannot possibly move the needle at that overall level. It's because there is something real going on in the economy. There is pent up demand for vehicles. People haven't bought houses for a couple of years and they are starting to build one. Businesses want to expand, whatever it is. So all that stuff really, as I travel across the country and meet customers, it seems like there are some real needs that people are trying to meet. There is real optimism on the ground about the nature of the business. The things to worry about, we spoke about the external sector. India is much less dependent on trade than many others. So it matters a little less to us, but the external sector is clearly an area of problem. Umesh referenced inflation a little bit earlier, but imported inflation in the form of oil prices is something else I would worry a lot about. If oil suddenly shoots up to 120, 125 and stays there for 6 months, all bets are off in terms of what will happen to demand on the ground. So those are real economy issues that we should worry about, and that will really have a much bigger influence on the overall credit than whether the fintech community gets a lot of funding or doesn't get a lot of funding. All that is much less material.
Sure. Revankar sir?
What I have witnessed, addition to what the other panelists said, what I have witnessed is today the consumer in India is looking for a quality product. And whatever now, if at all you travel abroad and come back, you would bring something earlier. Now, last few years, you have nothing to bring. Everything is available in India. The quality consciousness and ability to give same quality or equivalent quality product in India has done I should say it's a miracle of a sort, where everyone wanting to have a quality product and it's available in India. So I think our manufacturing ability, our buying ability has progressed over the period. We have become almost global citizens in most of the products and services expectation level, and working towards getting it. It is not only through credit. It is only through by increasing your wealth or increasing your earning capability. Indians have achieved it. So I think this is going to remain and will keep growing. I don't think it will. No, it is nothing like a bubble. It is. I think the demand and consumptions are going to be very, very steady and keep growing as the so-called, we call it middle class, or the earning capability of each individual is increasing in India.
Sure. I think remarkable thoughts here. My time is almost up, maybe 1 minute left, 1 to 2 minutes. But I will just do one thing now. Maybe I will give 10 seconds to each one of you and just maybe answer in 1 or 2 words or as quick as possible. And the question is very simple. How do you see the growth of NBFCs, considering all this, what we discussed, the remarkable credit growth of India and the economy shaping up? How do you see the NBFCs in the next 2 to 3 years? And I will start with you, Mr. Revankar.
I think the retail credit NBFC will be growing faster than the bank. If that's my view, I think NBFC have an edge and niche presence in the retail segment, and have a reasonably good access to the customers, and even the liquidity seems to be quite good. I think that's how it will continue to remain for quite a long time.
Right. Mr. Jain.
No, NBFCs will grow very strongly in the next 5 to 10 years.
Okay. Sure.
Yes, and also if you see I think the regulation, the SBR which has come, scale-based regulation, that really trying to mitigate the systemic risk which the NBFCs has gone through over the last 2-3 decades once in a while, to mitigate that the rules of the game has been laid out. So clearly there's a big opportunity, and we need multiple NBFCs, apart from NBFCs, the banks, the differentiated banks, which we have, small finance banks, so that the credit penetration goes up in the country.
Sure.
Agree with all that has been said. One thing I would add is that, as we said, as I mentioned before, that fintechs are probably going to look a little bit more like NBFCs. It's also my belief that over time NBFCs are going to start looking a lot more like banks, given the governance overheads that all of us are now facing.
Sure. Remarkable thoughts. I think great learning for me, and I'm sure all of you must have borrowed a lot from the veteran speakers here. Thank you so much for the time that you spent and the thoughts that you shared. I think we're absolutely on time, and it was a great learning for all of us. Thank you so much for listening to us very patiently as well.